A1 Trading to Tower, you are clear for takeoff. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
All right, everybody. Good morning and welcome to kind of the main event of the week. Let me go ahead and just make sure everything looks good here. There we go. So we are here for, of course, the NFP event, which is coming in shortly. We've got about 20 minutes to go before that gets released. There we go. Let me just make sure everything looks good. There we go. What we're going to do during this session, as we always do, it's been a while since we've had an NFP report, but what we do during these NFP sessions is we essentially talk about what kinds of data we're going to be looking for to generate sustainable moves in the market. So what many people will do on an NFP day, and I'm not shaming them. If you want to go to the casino and have fun, you do your thing. But what most people will do is they'll drop it down to a 5-minute time frame, and they will try to make some sort of gut call reaction of where they think NFP is going to send markets, right? But instead of trying to guess the NFP number before it comes out, what we do on this channel, on my channel, is we talk about the implications that the actual NFP number has for macro trends in markets. Another way of saying that is we trade after the move, and based on what the data actually tells us about the economy, we try to align ourselves in favorable conditions. If you've ever tried to trade the NFP spike, you know very well if you keep trying to do that, what happens? You get slipped to HE double hockey sticks, as they say at MFF. The point I'm trying to get at is that if you try and guess where the NFP report is going to go, it's a 50-50 shot. The problem is whether you're right or wrong with that 50-50 guess, you're going to pay an arm and a leg in slippage, spreads, all that stuff on your brokerage. So we do not try to make some sort of gamble as to where we think the NFP jobs number is going to go in the short run. Rather, we start to ask the question, if NFP is strong, let's say that it is very, very strong. We had lots more jobs added than what the market is forecasting. By the way, the forecast today is about 55,000 jobs, somewhere in that neighborhood. That's the forecast, right? I see some people asking, do we have an NFP report? Yes, we do. We are filling in some of the data from the government shutdown. Today, we get the September NFP being reported. Now, a lot of people have been very confused by this because it's very out of sync with usual first Friday of the month. Here's another confusing part. The first Friday of December, we will not get an NFP report. The BLS basically put out updated scheduling for releasing all this data. They are backlogged. All the people involved in curating these reports, collecting all the data, putting it together and reporting it. They were, of course, the government shutdown really disrupted all that. So we have a short term, for the time being, a different schedule on the NFP report. I will, of course, keep you guys updated here on the channel. If you want to subscribe, we'll be doing the streams here for each of them. Okay, so the expectation for today with NFP jobs numbers, the non-farm payroll is expected to come in around 55,000 jobs in 20 minutes. Okay, so what happens if we get a jobs number that is significantly lower than that? What happens if we get a significantly higher than that jobs number? Well, let's draw out a little bit of a table for this, okay? So we can get smart about this, and we can say USD let's say gold, and let's say stocks. Okay. Based on this, we have the NFP jobs number coming out. Let's say that we have 3 categories here. Okay. We're going to map out some scenarios to think through. If you have low, or let's call it bad jobs data, okay? Bad, okay, and good. Again, remember that forecast is around 55,000 jobs added, okay? So, what is the actual data coming in? We don't know. Now, gamblers all over the YouTube space right now are going to tell you, oh, gold's going to skyrocket, or the dollar's going to skyrocket, or stocks are going to plummet, because they're gambling. They don't know this number, but they are acting like they know somehow what the chart's going to do. Don't fall into that trap. It is a very, very dangerous assumption to make. No one knows with perfect accuracy what the NFP jobs number is going to be, unless you have some insider trading information, in which case you can go to jail for that. So anyways, let's do what we can do here on this channel, which is we can actually build a logical trade plan based on what happens with the data as it's released. If the jobs number comes in poor today, meaning it's really bad, it's going to send the dollar. Sorry, let me use a different color here. Hold on. It's going to send the dollar lower, likely. It's going to send the stock market lower, and it is going to send gold higher. So if you get a not just an okay jobs number, but a bad number, if you get a really, let's say it's a negative number, a negative print, we lost 20,000 jobs, we lost 30,000 jobs in September. Gold's going to love it. Dollar's going to hate it. Stocks are going to hate it too. In my personal view, that is the dynamic that we stick to here. What about if we get an okay jobs number? What would be an okay jobs number? If it came in pretty much in line with forecast, that would probably send dollar neutral. It would probably send gold. Let me think. I'm just going to stick with neutral on this one too. And it would probably send stocks actually higher. Okay. Why? Well, I'll get back to this on stocks in a second. Stocks, by the way, that's the hardest category here. Gold wants rate cuts. Dollar doesn't want rate cuts. That's pretty straightforward. Stocks want rate cuts, but they don't want a bad economy. Gold wants a bad economy to go higher, right? Gold loves a bad economy, which sounds super, bearish or whatever, but it is the reality. All right, let's keep going. What about if you get a good jobs number? What does that do to the dollar? Strong for the dollar. That makes sense. Why? Strong jobs mean less pressure to cut rates. Fed may not feel the need to cut rates in December. What about gold? Gold would not like that. Gold wants rate cuts. If we don't get rate cuts, gold probably does move a little lower. Stocks, in this scenario where you get very good jobs data, ready for this? My opinion is that they would go down. Confusing, but let me explain. If we are talking about jobs data coming in too strong or too weak, this scenario, really good jobs means less rate cuts. Stocks want rate cuts. They want lower borrowing costs. They want the consumer to be in a better spot. So they want rate cuts. They also, no rate cuts, not great for stocks. Okay. So really good jobs numbers. I'm talking about a grand slam. If you had 150K or 120K jobs added, it would probably send stocks lower in a weird way. Stocks also don't want to see the jobs market completely cratering. A bad economy could hurt spending, and consumers could, stop spending so much money, which would hurt the earnings of corporations. Stocks want Goldilocks. They want not too hot, not too cold. This is my general game plan going into NFP today. Okay. That's going to be my game plan, my thought process for this. If you get, let's say we get very bad jobs numbers today. I think dollar probably tops out around where it currently is. I think gold probably moves higher, maybe even tries to make a run back to highs in the next couple of weeks, and stocks could cool off a little bit further. Okay. Does this make sense? Can you guys just give me in the chat so we can move on to start taking a look at some charts? Give me a 1 in the chat if this made sense so far. This table, feel free to screenshot it if you want. Believe it or not, and excitedly, we're going to be building some of this stuff in Edgefinder, automated. Everything automated in Edgefinder. Edgefinder is only going higher, baby. Okay. Yeah, so we're going to be building more of those charts to help you guys. If you have Edgefinder, you'll be able to pull up an upcoming jobs report or something like that and get a breakdown without me having to tell it over the course of, a 15-minute part of the stream. So if you are somebody who has Edgefinder, stay tuned on that. We have a lot of features dropping in the coming months. Okay, so we have jobs number coming out in 12 minutes, as Bashi says. So let's see. Let's take a look at some charts. Yesterday we had a really nice rebound in stocks due to the the Nvidia earnings call that went very, very well. AI spend is alive and well. Tech stocks especially really love this. I'm personally long SMH, so SMH is up here in the pre-market for me, which is great. We did ultimately hold this area of support around the 336 on SMH. I have a stop loss just below these lows. But we still have something to prove here, okay? Tech stocks, especially, there's high expectations and there's a little bit of worry out there. As we jump up into this area, I mentioned this in my video yesterday. Last night, I put together one. I mentioned that if the bears are going to hold a spot here, guys, it's now or never. In my personal opinion, this is your most bear potential spot on this chart because this market is so bullish. The buyers are so strong on the bigger term picture. Recently, there's been a little bit of weakness in risk assets. If bears are going to take it, this is where I would think that they would do it. Now, I'm not a bear. I'm just telling you that as a bull myself, I think all of us, I don't think it's coincidence that price shot off these lows and has paused at the 38.2% retracement. This was also sort of a line in the sand for bulls prior. This general area was where bulls tried to hold it. We quickly dipped down, did a little bit of a Wyckoff spring, false breakout to the downside, and now we're back up. I think today is game time for Nasdaq and for S&P 500. I talked about this in my video yesterday. I am constructively bullish. I'm looking for one of two scenarios. I'm looking for the jobs number to give us that reprieve to the upside, break clean through these levels of resistance. I'm looking to buy dips from there and to add back in more stock exposure within my portfolio. That's my personal outlook. I'm not saying I think it's going up today. I'm saying if this happens, then I'm looking for possible dip buys from there. Another if for me is that if we crater back down to lows, specifically this October 10th level, I'm going to look at that a lot closer as a potential longer term area of support that I like as well. So I am not looking for any short positions on stocks at this time. I am looking for bullish setups, but constructive. I don't have a ton of exposure to stocks at this time. I've been actually adding some really boring ones to my portfolio recently. I mentioned in my Discord group that yesterday I bought shares of Procter & Gamble. I mean, this is a very defensive, very boring company. And I've been doing this in the last few months. I've been adding slowly to some names that I think, I can sit comfortably with over the longer stretch. That's my opinion. I think that, this tech rally could continue into year's end. I've been saying that for a while. And I still think that it can. I think constructively, price action, you want to see a break above this area of resistance. Again, if sellers are going to take it, I think it's right around here. So let's watch to see what sellers are able to do, or if bulls are able to overcome and send us back towards those highs. We'll see. S&P 500 looks very similar concept. Again, drawing our fibs from the highs to the lows. This 38.2 to 50% retracement zone, kind of same idea. It was where we found support previously. We broke down. If sellers are going to take a stab at this, I would think it would be sooner rather than later. But if you break through, let me give you a very bullish scenario. If you clean sweep through the 618 to the upside, that to me just looks like you are very, very likely headed back to all-time highs. It's not that far to say. I mean, let's remember, guys, for the S&P 500 to get back to all-time highs, it's a 3% move. That's not that big, right? A 3% move from here gets us back to all-time highs on the S&P 500. While this pullback has been an interesting one, 5% pullback in the S&P 500 is still very healthy, very normal pullback range. I personally, I'll say this again, I said it yesterday in my video, I would love to see prices to give a little bit more of a dip. I could add some more stocks and things that I like at lower prices. But if I don't get it, I'll still be looking for the trade to the upside with controlled risk. Let me explain one last thing with this idea before I move on to gold. If you break through these levels that we're currently trading and we look bullish and we pull back, I am not all in, leveraged long, super confident, knowing we're going back to all-time highs. That is the thought process of somebody who is gambling the markets. Somebody who actually trades profitably over the long stretch of time claims not to know what the market's going to do with certainty, but rather has ifs and thens. We use that language all the time on the channel. If this happens, then I'll look for a constructive long. If that long idea completely flops, then I'm going to cut my loss quickly for a small controlled loss. We have to be using the two words. These are your golden rules in trading. If and then. Every single one of us, every single person in this live stream may have made the mistake in the past of thinking they know with really high probability what the market's going to do next. The markets will humble the ever-living what out of you, okay? If and then is your friend. If you are completely wrong, then what are you going to do about it? If you're right, then how are you going to manage it? These words can guide you to the promised land, as we say on the trading channel here. That's the point. We want to have the open-mindedness to admit that we're wrong, to constructively cut losses when necessary, and to look for the next setup. Keep it moving, right? We talked about it earlier in the stream here, but we are approaching the NFP report number. It's coming out in about 6 minutes here. We are forecasted to get 53,000 jobs added to the U.S. economy here. This is the September-related meeting here, guys. I know that's ancient data, but let me tell you one quick note. So they postponed the November jobs number. Now they wiped off the face of the earth the October jobs number. We're likely never going to get it. It's a black hole. So if that's first time information hitting you, yeah, welcome to the modern era. The October jobs number is likely never to be published. Okay, so we're not going to get that. That's, at least right now, that's consensus from the White House. We're not going to get the October jobs number. In December, we usually expect the first Friday of the month to get an NFP report. They postponed that past December 10th. That date is critical because the Fed is December 10th. So let me make this really clear. The Fed is going to choose whether to cut interest rates or not on December 10th without another jobs number. Today's NFP number is the last jobs data print from the NFP report that we're going to get prior to the Fed making the important decision as to whether or not to cut interest rates or not. Let me keep that very simple. Today's jobs number matters because it's all we've got before the Fed decides to cut rates or not. It's a huge data release. Now, it doesn't mean it has to have a huge reaction, because if you come in right on the dot, yeah, the market's gonna be like, okay, that didn't really do anything. But if you get 100,000 jobs added or 0 jobs added, that would move the market likely quite a bit, because it's going to dramatically change what the Fed does in a few weeks. Again, the Fed doesn't get another NFP number after this one before it has to choose whether it wants to cut rates or not. I hope I broke that down in a way that was understandable. Point blank, it just means today's number matters, because that's what we've got to work with, or what the Fed has got to work with. So we as traders, this is game time. Okay. Like I said, price action is something I'm going to watch very closely on the NAS. Let's take a look at gold. Gold continues to be in what has been a very solid upward trend overall. I've seen some people calling this a potential lower high, but remember, at least on my channel here, when I talk about technicals, I wouldn't call that a lower high until you actually get a lower low. So if you break support around 3,900 to 4,000 on gold, then I'm with you. That's a lower high. But right now, I wouldn't draw that conclusion. I think we are just chopping and consolidating. And gold, like everything else, is waiting for NFP. It's waiting for data, which we haven't had in a while. Remember that also on Friday, we get the COT data. We will track that very close on the channel because on Friday, we'll be able to take a look. This has been delayed for a while. We've been desperately waiting to finally see what institutions have been buying and selling. We'll talk about that in a second, but big picture, on Friday, we get updated COT data. We get to see what during this blackout period with the government shutdown, we are finally going to get to unpack what institutions are actually doing under the surface. Have they been buying gold? Have they been selling gold? Have they been buying or selling stocks? The dollar, are they bullish on it? We're going to get that insight on Friday afternoon. Edgefinder will automatically grab and update that within our tools. And if you have a copy of Edgefinder, you'll be able to pull that up on Friday afternoon and get an updated look at what institutions are doing as that data releases, and our software will automatically pull it in. So stay tuned on that. It should be very interesting to see what that brings in for us. Just real quick, if you don't have a copy of Edgefinder, we'll drop a link here in the chat really quick. I'm just going to do that. If you want to speak directly with a member of our support staff, we're currently doing our Black Friday sale. You can get access to our tools for 45% off if you message in using the link that just got dropped in the chat or under my camera here, the discount QR code that you see there. Scan that with your phone, whatever works best for you, and you can get access to that. Guys, we've got 1 minute to go here. Gold. So I kind of brushed over gold. I am generally bullish on gold. Edgefinder, I believe, still has a bullish reading on gold. Let me just check. Yeah, gold has a +6 reading. So I'm looking for dips. If we get a sell-off in gold today, maybe some strong jobs numbers, I'm going to look into potentially getting long gold at some key areas of support, like that level I mentioned, that 3,900 to 4,000 level. I like that for gold. Guys, we've got about 45 seconds here before the jobs data comes in. We'll talk about all of this stuff. We'll go into more detail after the jobs number hits. Stay tuned because a lot of people leave right after it. Don't go anywhere. We're going to actually break down what this data tells us here right after the NFP reports. So about 20 seconds out here, we've got everything pulled up on the screen for you. Stocks right here. You've got Bitcoin bottom left here, gold, silver, dollar, and oil. We've got everything on the screen to keep us updated on what's going to happen here. Let's see. Jobs report should drop in just a few seconds. All right, let's see if we get any movement. Report should come out momentarily. Wow. Okay, guys. So we just got a big beat in terms of jobs data, 119. However, to make things confusing, the unemployment rate ticked up to 4.4. 4.4% unemployment rate just showed up here within the jobs report. That is a big uptick in, well, not a big uptick, but a big uptick in jobs added, as well as a slight uptick in unemployment rate. Let's take a quick look here at where we're at. Dollar index is actually moving lower, which is kind of interesting. And I would actually say right off the bat, that's a bit of a mixed print because unemployment rate rising, bearish for dollar. NFP jobs number coming in strong, bullish for the dollar. So you've kind of got a little bit of a mixed print here. And so far, not a huge reaction out of any of our charts here. Bitcoin slightly higher, dollar slightly lower, potentially could see some whipsawing here, to be honest. I think that would be probably my guess. Jobs report mixed because, again, 119,000. They also revised this previous number lower. So let's call it a good, we did get a solid beat in terms of jobs added. Unemployment rate, however, ticked higher. How can that be the case? Well, these numbers are calculated a little bit differently. This is not just taking into account absolute number of people getting hired or not. It is taking into account, people looking for jobs, applying for jobs, et cetera. So 4.4%, an uptick in unemployment rate, but also a strong beat in terms of jobs numbers added. So good jobs print in terms of number of jobs added, but unemployment rates staying sticky here and even moving higher. So we see at least an initial reaction to the upside in the stock market. Nasdaq is higher. Let's take a look at gold here. Gold is mixed to flat on this report. Bitcoin also trying to make a move higher, but you can see kind of erasing those gains here on the 15-minute time frame. 5-minute chart shot up, shot back down. Euro dollar here, look at this. Euro dollar's moving higher, pound dollar moving higher, dollar yen moving a little bit lower here, dollar Swiss franc. So a little bit of weakness coming in on the dollar here. Take a look at this. There's your 5-minute time frame, but daily chart still sitting pretty right there at that not all-time high, but that recent high, that major level of resistance around 100. Still just sitting there on the dollar index. I would say, again, mixed. So if you have a mixed data point, remember what we said earlier about stocks in a mixed environment, probably good for stocks. Why? Because the Fed's probably still going to cut rates. Well, it doesn't completely rule out rate cuts. Keeps us generally in the direction of rate cuts if inflation can cool off a little bit. Fed has also mentioned that they think the Fed they think inflation will continue to soften over coming months and years. So we'll see. But S&P 500 here, at least initially, is green off the reaction. Here's your 5-minute candle. Nasdaq, same thing. Dow Jones, and take a look at the Russell. The Russell liked this. Let's take a look at yields as well. This is going to give us an indication of what the bond market thinks. Bond market thinks that this is a little bit more dovish in favor of rate cuts. So that uptick in unemployment rate slightly favoring. And I'm looking all these charts because, again, yes, this is kind of mixed, but I'm looking to the market to see which of these two things is it reacting to more. So far, I'm going to say it's reacting more to the uptick in unemployment rate than it is to the jobs number. But I would argue that this print is pretty mixed. So I would see limited upside in or downside in most of our charts here today. The VIX continues to sink lower here as this volatility gets priced out of the market. The unexpected news of NFP is now behind us. So now that is less likely to be a big catalyst here today. Again, Bitcoin still in the dumpster fire here recently. Bitcoin has been getting killed from a technical basis. I've pointed out that I like the idea of looking at Bitcoin longs if and only if you were to get some sort of recovery move. If you start to see strength come into this chart, I like it. I like it for breakout buys and retests, but I'm not a fan of buying Bitcoin with lower lows and lower highs. Like I want to see this price action prove itself a little bit for a possible trade long side. There you go. Thank you for pointing that out, Basil. Yes. Average hourly earnings month over month and year over year missed downside target. So interesting. Are we going to get an unemployment claims today? That's a question I don't know. Jobless claims at 220. Oh, okay. So we did get jobless claims as well. Can anybody confirm that jobless claims at 220? Othman, is that for sure? Yeah, very mixed report, I would say. But you can see this little bit of softness in some aspects of the labor market. You can see the stock market is reacting positively to that, but it's not critical. If we saw minus 25K NFP plus unemployment rate rising dramatically, this would not be the reaction in the stock market. I would argue it would probably be lower. But today we had, again, that Goldilocks, that mix. They want rate cuts, so they're okay with a little bit of softness in the labor market, but they don't want devastating labor data. And I think you kind of got that. So the stock market's, at least for now, cheering that. It's saying, okay, jobs numbers were very solid. And that's going to update our signal here on Edge Finder. So what this will be is unemployment rate will be, for gold specifically, it will be bullish for gold, but employment change will be bearish for gold, right? Because it beat expectations for employment change, but it also missed expectations for unemployment rate. That's bullish for gold. So mixed response from gold. So I would say the more clear and obvious move here today, I would say, is probably stocks like this. If you can get up and over this 15-minute time frame level of resistance, you had a good NVIDIA print. This still favors, in my opinion, this favors upside in stocks. So we'll see. 220K is true. Thank you. Perfect case for scenario for stocks. Yeah, I mean, that's now again, I want to reiterate, I'm not saying, oh, you just go full tilt, all leverage in on the Nasdaq. I'm not saying that whatsoever. But I'm saying that generally from a economic idealistic spot, that was pretty solid. You have jobs better than expected. You have unemployment rate kind of keeping that at bay. So Fed still considers rate cuts, but the jobs market's not in the gutter. So at least for now, it looks like we may have bottomed for the time being. Let's watch how price action plays out. I think that, if you drop it down to the 4-hour time frame, you have some resistance here looking left on the SPX. You're sitting kind of at that shelf where we dropped off of last few days. So if we can get up and over this type of area with some solid price action, that looks strong. We will see. Revisions came in lower. Yep. So again, still kind of favoring that not too hot, not too cold jobs print, which really favors stocks, as we talked about at the top of the stream. Let's see, what else do we have to look at here? Dollar index, again, 4-hour chart looks a little red, but I think that if you're asking the question, does this make it very obvious for the Fed to cut interest rates in the upcoming December 10th meeting? I'm going to say it does not. I'm going to say that it doesn't really dramatically increase the probabilities, but it also doesn't rule them out either. You can see the 10-year yield is moving lower. That's telling you rate cut probabilities are rising. A lower 10-year yield suggests, oh, the Fed could cut rates. I'd be curious to check the FedWatch tool here later today, but I'm going to go ahead and say that I think that this slightly increases the probabilities of rate cuts, and that is probably why you have this rise in stocks. Can you briefly explain jobs data again? Absolutely. So let's do it really simply, okay? We call this a mixed to slightly soft report, which can be confusing. Sometimes it's more easy to read NFP reports than others. Let's do the really simple breakdown. Non-farm employment change was a much better number than expected. So that's very strong. But unemployment rate also ticked higher than expected and higher than previous. Soft, not so great. Average hourly earnings came in a little bit softer than expected. And so that's another soft tick here. We also had someone in the audience say that this number came in to 20K. So this is another soft. So the jobs added were pretty decent, or pretty solid, actually. We did get a little bit of revisions lower on the prior number, but for the most part, we would call this soft to okay. I would give this a soft to okay rating, okay? Now, remember, if you watched at the beginning of the stream, and I encourage you to go back and listen if you need to, I mentioned that if you had abysmal jobs data or incredible jobs data, stocks wouldn't like it. Stocks would not like the idea of, I think everyone understands why terrible jobs data is not good for stocks. The economy's not looking good in that scenario, right? It's going to hurt earnings. Everybody's not going to have a job, et cetera. We get that. Where it's confusing is very strong jobs print would have also not been great for stocks because it would have completely ruled out a rate cut in December. People want rate cuts because that means the consumer gets a little boost. Companies can borrow at lower costs. Fed's going to keep cutting interest rates. It's stimulative. It pumps money into the system. Soft to okay or Goldilocks is exactly what the stock market wanted today. And it got it. So I would argue that this was a very, very hospitable thing for stocks. They're still going to get their rate cuts likely. If it's not December, they're still going to keep getting rate cuts into 2026. But the jobs market's not cratering into the earth, right? That's where I think either extreme would have really caused concern. But now we're staring down the barrel of a solid NVIDIA print and jobs data that was kind of right where the stock market wanted it. Not too hot, not too cold. I think that's the clear trend today. I think the clear trend is stocks are trying to bottom here. I think from a technical aspect, you really want to see, I keep marking up this chart, the Nasdaq 38.2% retracement. I think I want to see some closure above that today just to confirm that we are looking solid. And then I'm probably a dip buyer anywhere into the rest of this week ahead of the Thanksgiving week. That's my personal opinion on it. To help me out with this, we're going to bring in Chris Pulver here in just a second. Before we do that, though, let me just really quick mention that our Black Friday discount is going on right now. And if you don't have access to it, or if you don't have access to the Edge Finder, it is our biggest discount of the year. You get access to the top setups algorithm. I mentioned this earlier, but let me also, and also, by the way, S&P 500, Nasdaq, still getting very solid readings here coinciding with this. So I'm liking to see this. Yen pairs also getting some strong readings as well. Gold still bullish, silver still bullish. I still like the consensus generally here on the Edge Finder at this time. We also added something really cool. We added a volatility heat map. And this might be a Chris Pulver feature at this point. This is a volatility heat map. It shows you which things are moving dramatically above their usual volatility. So for example, certain things that are, moving above their usual volatility are things like the Dow Jones, the DAX, CAD Swiss, the FTSE, the Pound Swiss, and then things that are moving a lot less than usual. We also added a momentum heat map. So all these sorts of different screener tools to help traders find better setups. We also added an AI news generated feed here, which again, essentially creates for whatever chart you want to look at. If you want to look at gold, etc., whatever is most interesting to you, you can actually just select your favorite chart and it will generate a report based on what the internet is generally saying about something that you're watching, what's causing it to move. So if you're ever wondering, if you wake up and gold's down a bunch, you're like, what's going on, right? You can essentially come to this and it will give you a little bit of an updated report. Edge Finder just keeps getting better, man. It is, we've got so many projects lined up into 2026. We're like just backlogged with projects to do within the tool. Economic heat maps, we've got some things planned here to continue to improve those. But again, with the jobs report that came in, better than expected, this is going to stay strong for stocks overall. Unemployment rate is going to tick up relative to forecast. So that's going to kind of wash this out where you had a good NFP, but a not great unemployment rate. So it won't really change the scoring too much on stocks here, at least for the time being. So if you have Edge Finder, get excited because we've got so many cool things coming your way. And just as a reminder, as always, if you're an Edge Finder user, you don't pay for any of the new features. You do not pay. Again, we don't upsell you. It's not like a paywall every time we drop a feature. If you're an Edge Finder user, you get all the new stuff for free, just like the new volatility heat map that dropped overnight. It's now yours. You don't have to pay anything extra. Just log into your Edge Finder and boom, bam, thank you, ma'am. You got a cool tool waiting for you. It's like Christmas presents all throughout the year for traders. If you don't have a copy, it is an excellent time to pick up one while the sale is going on. Let me just drop this here, and then we're going to go to Chris Pulver to see what he has to say about this NFP report. 40% off link here. So I'm just going to drop this. 1 second. All right. Here we go. All right, we just dropped the link. If you need access to it for the 45% off sale, we're doing our Black Friday discounts, our biggest sale of the year. Okay, good to go. All right, we're going to bring in Chris Pulver here. Like I said, don't miss the chance to pick up a copy of Edge Finder at the lowest price all year long, or scan the QR code right below me here for those discounts. Available now for a limited time as we come into the Thanksgiving week. That will be ending pretty soon. Okay, let me bring in Chris here. I'm running the ship solo here, so give me just 1 second. I'm just going to switch this around and then hide this. Where's my banners here? Usually I have the producer behind the scenes, so I apologize for the light. What's up, Chris?
Good morning.
Chris, what's the verdict on this NFP? Is this I kind of explained it as not too hot, not too cold. Stocks seem to like it for now.
Yeah, I think the market it got what it needed. I had a thumbnail yesterday that was NVIDIA must save the market, and that's kind of what happened yesterday with earnings. NVIDIA is up, so pretty much right what the broker was expecting. I calculated out based on earnings about a 10 to 10.50 move. We're up about $9 and change right now. So having some opening, a little bit of follow through. The pleasant surprise would be we go from 195 up to like 205 or 210. That'd be a pretty surprising follow through post earnings. But for right now, beat revenue. Everything looked good top and bottom for NVIDIA. I mean, literally right after hours, the futures market was up over 1%. So it's hung to that. I mean, I saw like 1.1, 1.15 right after the close yesterday. And here we are looking at about 1.4, 1.5% this morning on the S&P. So we're due for a pretty meaningful gap to the upside this morning. And it's probably going to turn this week green. I think this allows the S&P, the Nasdaq to reclaim the 50-day moving average. I think this is a pretty big push to see if we can, get back into like intraday flows, positive gamma, and try to push things a little bit higher. So, yeah, I mean, NVIDIA kind of saves the market as far as non-farm payroll. Looks good for the most part. Obviously, the revision isn't great. I mean, we went from a what was the revision? 22K down to -4. We just printed 119 versus forecasted 53. I'm reading the Bloomberg calendar. So the revision obviously is like the big question mark next month, in addition to having another delayed, October print that's going to be in December. So I'm curious, like, when does non-farm actually catch up, where it's like last month's is now printing this month, right? So unemployment rate went up slightly to 4.4. Claims were down, job numbers were solid, but what it looked like it solidified is the pause in December. This jumped up from 66 to now 72. That's my takeaway from the non-farm number is
Interesting.
Fed's not going to do anything. Yeah, it jumped up a little bit more.
That really, so that is that's very nuanced, Chris, because yields, at least a second ago, yields moving lower, and yet FedWatch tool may still be kind of saying not quite enough to change, the votes towards rate cuts. Kind of interesting. So bond market is saying, well, it's kind of suggesting, well, actually now yields are bottoming out, at least.
Yeah, yields look like they're unchanged. I'm looking at 10-year yields. They're pretty unchanged. Bond market. Unchanged. So let me ask you this, dude. Do you think this little poke above the 200-day moving average is a setup for a bond market head and shoulders trade? Now, this could be two things. One is, let me get my drawing tool up here. If this is in fact a head and shoulders pattern where you can see the neckline, if we break this neckline on TLT, be something like this. We break this neckline on TLT right in here. Is it possible that we are, and maybe this isn't done yet, but if we break this, is this a sign that more money goes back into equities, or is this a sign just take bonds versus yields, that yields go higher? I don't know which is better or worse for the market right now, but if bonds go down, I mean, maybe that's a rush back into equities. But if we see yields going higher, then we're right back in the same camp as 2024, which is Fed's cutting, yields going up. Take that into a new year. Fed's going to cut. I mean, it's still like there's still some iffiness with whether or not this market's going to make a full recovery. So NVIDIA for right now saves things. I think that's good. That's stable. Let's see where price action is today. Like I said, big important thing is that we are reclaiming the 50-day moving averages, and we are well above that based on the pre-market price action. So if we open up at 673 SPY, we are back above with a opening candle. We still have, I mean, what's crazy is we could open up here and still have about 1% buffer to stay above the 50-day moving average.
Yeah,
so
I mean, definitely a nice at least short-term bottom seems to be forming. We'll see if it can hold that ground and continue. But yeah, makes good sense. We're back above the 50-day moving average. It looks really solid. And just to follow up on your question about bonds, TLT, et cetera, I still think that I think the chart to watch for me remains the dollar.
True.
I still think that 2025 has been pretty abysmal for the dollar. But I do think that now that we've bottomed out, some of the trade dynamic stuff of the world is behind us. I wouldn't be surprised if you did see some strength into 2026. It depends what happens, obviously, with the trade dynamic. If something worsens again, if something comes back into play, obviously that challenges that story once more. But when it comes to the dollar index, you still have above trend growth in the U.S. compared to other peers. You still have a central bank that is, back and forth on whether or not they, rate cuts are coming in, whereas other places have economies that are seeing no growth. The U.S. economy is still chugging along, and today's jobs report again brings more confidence to, at least for now, the jobs market's not cratering, it's not crashing. So I don't know. I feel like the dollar index may maintain its recent gains. At least maybe we chop around here for a while. I don't have a huge bullish outlook on the dollar, but I do think that given that trade dynamics could continue to cool off between major nations in 2026. If that happens, I do think that that is a strong tailwind for the dollar, just like it was a very strong tailwind for the or a headwind for the dollar when we had this giant down move, right? This down move was not, oh, we're going to cut rates. I mean, it was a little bit of that, but it was way more, oh, the Trump administration is completely rewriting trade, and other countries don't love it, and so they're selling dollar. They don't trust it. Again, if you are making, I think that's like the biggest thing. If you are looking at the dollar geopolitically, from here, are things going to improve or things going to worsen? And I think that the economy is almost second to that in some ways. I mean, the trade dynamic completely terrified people about, we're going to have massive inflation and an economy that completely collapses. And we have not seen that. So I don't know. I think dollar index in 2026 is very interesting to watch.
Well, I think we also have administration that if they had their choice, they'd like to see a weaker dollar.
That's true.
So, I mean, with Powell stepping down in 2026 and whoever comes in, I mean, I hate to say they're going to be, more aligned between Fed and administration, but I think as we talked about this week, like the first half of 2026 will be probably as strong as the Trump administration could possibly be, as far as like united front. This is our agenda. This is what we want to do. Big, beautiful bill, liquidity, Fed. Like, I mean, if Supreme Court doesn't rule out tariffs, like we have like a stacked administration that is like what they say they're going to do is probably what they're going to try to do because that's their window. If they can't accomplish this stuff by the first half of 2026, then it's up in the air for midterms, in the fall. So that I think, maybe that short-term squeeze on the dollar, if we get to 101, 102, my concern with the dollar going stronger is that's risk off for the markets. So I'm actually kind of hoping to see the dollar just kind of chop around if we want to see the end of this year be pretty solid and stable. I took a look at Bitcoin this morning, not really responding a ton, but certainly better than being down a fresh low. So 88.6 was the recent low. We're at 91. There's a long ways for Bitcoin to kind of show some bottoming here. But I'm not, and we talked about it. I'm not going to like just throw in and guess where the bottom is, because certainly 30% just is a number. I mean, we can pull back 50+%, and I'm just going to kind of wait this out. But what I am doing is selling some calls on current positions, trying to kind of start the repair process with a portion of my investment, and then we'll go from there and kind of reassess this price action in the next maybe 30 to 60 days.
I think that, the next spot for Bitcoin, at least from if you're more of a long-term outlook type of person, I've been looking at the weekly chart. We lost that 50 week. All right, fine. Sellers completely in control here for now. I still think what we talked about yesterday, I still think your next level of more obvious, if there's going to be a buyer of this dip kind of thing coming in, I think that 80,000 to 75,000 range, I've seen that online a lot, maybe an area. I mean, the attractive thing for me on crypto from a trade perspective or an attempt to get long on crypto is pessimism out there is outrageous. I mean, it is like, a peak contrarian trade to look to get long Bitcoin. And so that's where I get attracted to that risk reward. That's the difficulty of it. It's like the trend is down, at least in the daily time frame, but still very long time frame. Like if you have enough conviction on it, these are long-term levels of support that still kind of fall in line with the 100 and 200 weekly moving average. And I know that's definitely longer term than we usually talk about on the videos, but or the streams, but something to think about. And then you have gold, which gold is incredibly well above its weekly moving averages. We take a look at the daily time frame. We're retesting this 20. I mean, I do think that there is still momentum in this chart, and I don't like to fight momentum. So I am a fan of thinking that we could get some continued. Maybe we even go back and retest these highs. I'm not one to try and call a top in these sorts of uptrends. We've talked about that for years. I mean, neither are you. We both kind of wait for those dips, or in my case, I'll trade this with a tight stop and just say, hey, if I can catch that rally, I may take that trade if I have the right fundamentals to back it. But I don't know. What are your thoughts on gold? Is it 2026 outlook for it?
Yeah, well, we have to hit the 200-day moving average first and foremost. Like I'm really not in. I mean, I'm in. Like I got back into GLD, SLV. I got back into CEF and PHYS. I put those in Pulver Alerts. The 200-day moving average is like 540 bars since the last time we touched it. We haven't had a run that long since 2009, 2011. We stretched up over 600 bars at that time. And then it came cratering like 30% lower to hit the 200-day. You can see that right in here. Maybe a little bit easier if I zoom out. So last time it would have been, this is way back here, 09 to 11. Here we go. So this is the stretch from 09 to 2011. You can see that capitulation move. We had a like 25% move, I think, above the 200-day. And bar count wise, I'd have to zoom in, but I know we were well over 600 bars. So it's way back here. Last time we tested the 200 EMA is about there. We get to 600 bars, and 600 still pushes in a high. We're at 621 and just dump all the way to that 200. So even if we go higher, I'm fine to like dollar cost average into a higher high, but don't forget about the magnetic pull of that 200-day moving average. If it gets to a really high bar count, we're already at 540 bars. That's almost, I mean, again, that's another 60 bars. So we could take that into the new year. We could consolidate up here. I think a perfect trade on gold, if I'm going to, ask it to do something that I think would be easy to trade, it would be, we run up to the highs again. That's crazy where I have to go to find this thing. We run back up to the highs again, similar to silver, and we fail. So we run to the highs, we fail, and either this thing fails, fantastically, where it like fails to the lows. That's a double top. It measures out. Everybody following this? So if we came up here to the highs and we fail, we hit the lows, measure this move. There's your breakout, buy gold, and don't look back. Boom. Something like that.
It sounds crazy, Chris, but that's not an unprecedented type of pullback in gold, right? I mean, that sort of move, it sounds like Armageddon if you're like leveraged long up here.
Not when you look left, though. Not when you go back to the lows in 2022 and like this thing has to give us some type of pullback based on this, 3-year stretch. Right. I hope. Yeah.
And it's like we always talk about, recency bias is very, very strong, especially with people who have, if you've only traded for a year, if you traded for 2 years, you only know gold goes straight up. And so it's a dangerous, and it's not, I'm not making fun of that person. I'm just saying, hey, look, that's a reality. Same thing you could point out in my trading career. We've never had a stock market, bear market that's lasted longer than 2 years. I guess even really like a year and a half with 2022 is year and a half or so. So everybody, I'm not saying that as in like, oh, you just don't know any better, but I just say, do your back testing. Like if you trade gold, understand that if you go back in time and look in like, this is my favorite example, is if you go back long enough, you go back to the 1970s, there was a 10, 15, 20-year period where gold didn't go anywhere. So it's just, the reason I say that is because we as traders, you have to, like, ignorance is your enemy in trading. Like if you think for sure what the market's going to do next, and you oversize your bets because you believe you have some sort of magical ability to call it, the markets will humble the whatever out of you. Like the markets are hard to call, and trading, Chris, you've been in this game for 20 plus years at this point.
Yeah. Like, going on 26.
Like if you're in this market, you've seen enough environments to know things come and go, things change in the recent years. It's been all about the Mag 7. In the 2000s, it was all about dividend quality companies, like what seems like a never-ending environment, like, oh, gold only goes up. It can change, and we have to be prepared for that.
Yeah, and I also think that, like, you have to learn from your winners and losers kind of equally. It's obviously people think they have the right strategy. If you're making money, things seem great. Bull market geniuses are everywhere. At some point, the market's going to de-risk, de-leverage. And the scary part now is at these all-time highs, like a deleveraging could be 20, 30, 40%. And I mean, the scary part is it could wipe away like a decade worth of gains. So that's the weird part, is this market is designed. I mean, that's why the S&P is market cap weighted, Nasdaq market cap weighted. But even to maintain bull structure, we have like 20 to 30% slack. Like we could pull back 20, 30% and it's still technically a bull market based on the bigger picture. But man, it's so damaging to see this market and it's been a decade of this. I mean, if anybody has been trading for the last few years, let alone the last 10 years, all we've seen is bubbles and busts. And they're many bubbles. I mean, you talk about bubble, it's like, okay, .com is the reference bubble. But you talk about 2015, if you go to, the SPY or Qs, you talk about 2015, 2016 was dead sideways. We melted up into 2017 after the breakout. So 2016, 2017 into 2018, volatility event, broadening pattern for almost 2 years. COVID hit, big crash, all the way back up to highs, deleveraging in late 2020, or all of 2022 for 10 months. I mean, all we've seen is ups and then sharp downs, ups and sharp downs. I think if traders had to deal with another 2022, it's going to be brutal for most traders out there. I mean, if you just bought the dip through COVID, bought the dip through 2025, it's like, that's just how the market responds. It wasn't like this all the time.
Right.
These cycles are way faster. So, I get it. If you have dry powder and you have a horizon of, 5 or 10 years, you're probably going to be fine. But, as we say, it's if people are leveraged and overexposed, the market will make you pay dearly, and you'll have to ride it out. And it will, it'll make honest traders of everybody, whether you win or lose. There is no the market's right. And you're either with it or you're not,
When you're a kid and your mom says, don't touch the stove, it's hot, that will never actually teach you to not touch the stove. The only thing that will teach you not to touch the stove is touching the stove.
Yeah.
And that is leverage in trading. People who, employ a bunch of leverage, a bunch of margin, they spend, they think they're a genius in an up market because they're just leverage. People are learning that right now in crypto. And I say that with no joy, right? That's a painful lesson that people who are learning that in crypto right now, it feels awful, right? Everyone who has been in trading for a while has learned the hard lessons of being over leveraged, having too big of a position size. And, the tasty trade legend, Tom Sosnoff, he mentioned and mentions all the time in his content that, it's always a position size issue. Like that's
Right.
always the problem.
Absolutely.
It's always the problem. If you are struggling with your trading, I would say there's a 95% chance that what you really struggle with is position sizing. And this is why, Chris, I always talk about this. Trading psychology is important. Don't get me wrong. But sometimes people think it's trading psychology when it's really your position size is ridiculously big. Because if you have a big position size on, of course, your trading psychology is going to be out the window. It's hard to stay logical if your position size is ridiculously big for your account.
Right. Really quickly, I've got to run here in just a minute, but there is a crypto fear and greed index, and it is as bad as it's ever been. So at least for the last couple of years. And again, that's not a sign of, well, there's the bottom in crypto. It just means, if you are a Bitcoin investor, and this is primarily what I trade, I'm not really interested in altcoins or anything like that, but we are at some pretty nasty levels as far as extreme fear. If the risk on faucet is turned back on, we stabilize here. I think NVIDIA helps a lot. So we might see a stability here in Bitcoin. Maybe I'm not holding my breath. I mean, we've clearly done some technical damage. We've got the death cross on the EMAs, but it is pretty fearful. Let's see, if there's some structure to be kind of held in. The one thing I have appreciated about Bitcoin all these years is it coincided nicely with like all of my technical trading in Forex. It's a pretty pure market. It has efficiencies and inefficiencies. The way this thing has fallen the last couple of months, I would say this, I'll throw it out there. Eventually, this pocket, when the structure changes near the bottom, this is a pocket I think Bitcoin goes back to. So 115 to 120 price target, but don't catch a falling knife, right? We want to look for some type of structure down here, some type of bottoming, and then we start looking at structures breaking. Sure. But that would be my destination as far as taking this back up for a technical trade. Obviously, regaining those highs would be pretty exciting. But, it's a patience game for right now. Damage is done. Lower your cost basis. Don't overexpose. I'm not adding a bunch more here at the lows outside of what's already been kind of allocated. I'll probably take another small stab at it if it's down to like 75K just because, but not much, like probably a fraction of 1% to throw back in there. Okay. But that's it. So I'll keep an eye on it.
Sounds good. Chris, I know you got to run, so I'll kick you out of here, and we'll get the stream moving along. So
cool.
Thanks for joining on, and we'll see you next time, man.
Sounds good.
All right, guys, real quick, before we get, James is going to be on next here in just a second. Before he does that, let me just remind you guys, quick, real recap of sentiment. S&P 500 put to call ratio went into bearish sentiment here recently. I find that to be really interesting because, again, well, we're just hovering right below it. We've got high levels of bearishness in this market at this time. People are still very worried. That is also confirmed when we look at the AAII investor sentiment survey that just dropped. People still very bearish. Again, I think that this leaves more upside in the stock market. I think it leaves upside in potential risk assets in general. I don't know where the bottom in Bitcoin is, but I'm also not, I would say it's a very hard short right now too. Like, I think the bigger picture is probably a buy in the, on the dip here on Bitcoin, but I don't know where that is, and I don't really buy and hold in crypto. So I'm looking for higher lows, higher highs. I'm looking for a change in structure like Chris, but I think Bitcoin has some upside at some point. I just don't know where. It could dump lower first and then bottom out, but I'm watching it. Crowd sentiment still very pessimistic. Keep an eye on your sentiment gauges. If you don't have these on your charts, you're missing a key piece of this puzzle. Part of the reason I think this market wants to rally is just to go against the crowd sentiment, which is very pessimistic. If you don't have access to our tools, don't miss your chance to pick up a copy of Edgefinder. We are currently doing our biggest sale of the year. It's our Black Friday discount. It gets everything that you see on the streams and videos, the tools that we build, 45% off for a very limited time. Also, if you need information about the price, if you need information about our payment plan options, here's how you can do so. Scan the QR code. We'll put it right below me in just a second, or click this link that's just been dropped in the chat to speak directly to a member of our support staff about getting access to Edgefinder before the sale ends. Again, it's our biggest discount of the year. Black Friday is next week. Don't miss it. If you've thought about it for a while, at least explore the product, see if it's right for you. There's more features than ever coming out in 2026. And I wish I could talk more about them, but I don't have any visuals to give you just yet. They're still being coded, but we got some incredible tools coming to Edgefinder, and they're yours for free if you're an existing Edgefinder user in 2026. Don't wait. The price is going to go up in 2026. So there's your chance to pick it up. Buy the dip on Edgefinder. If anything, buy the dip on Edgefinder. All right, guys, up next, we got Forex James coming in just after this quick break. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. Happy Thursday. Hope everyone's well. Not really any changes in the markets. We have got the dollar showing a little bit of rejection at the area we looked at yesterday. So we had US news come out. I'm sure Nick and Chris went over that with you, so I'm not going to repeat things. But overall, not a great reaction from the dollar. So what we discussed yesterday was basically sort of the key area that we're currently sat in here. So we've got the $100 key level. We've got the daily 200 moving average, and we've got this triple top, maybe even a quadruple top if you consider this as well. So we've got quite a lot of resistances in terms of price levels currently on the dollar. So it'll be interesting to see whether we can have that breakout that we've sort of been anticipating for quite a while, or if we're going to continue in this pretty much sideways range. Either is possible. So we still don't have the data really to drive a massive move in the dollar. We've obviously got the rate cut idea for December getting priced out of the markets, leading to some bullish sentiment on the dollar and bearish sentiment on the indices equities markets. But overall, not really much of interest, or really any interest going on just there. What I do like on the dollar is the reaction that we've had off this low. So I've been talking about, in fact, I think a lot of traders have been talking about this, so I'm not going to say but this has been a big focus for many traders for weeks and weeks. So we had the dollar basically come down to this low, have a bit of a rejection, and that was a bit, I don't want to say bull trap, but it did kind of seem that way. It induced a lot of buyers. Then we double bottomed, and now we're starting to see buyers stepping in again. We're starting to see typical signs that we are on maybe starting that new cycle. So if we have a look at what the dollar does, so we almost double bottom here, it's not super clean. Then we have this bull cycle. We have a bear cycle, we double bottom here, bull cycle again, we've double bottomed here. Are we going into that next bull cycle? You know, you could sit here and say, no, you know, we've got Fed cuts on the way, we got blah, 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 blah. There's lots of reasons at the moment to say that that's not maybe the situation. We do have relatively weak data in the US. And again, we do have those rate cuts expected in 2026 as well. However, you never know what the markets will bring. So that's something I'm definitely keeping in mind. If we can start seeing some data pick up and we can start seeing the dollar trending higher, I'll be looking to get long on the dollar and possibly hold that theory throughout 2026. Anyway, moving on, we've got pound Swiss. I've just realized I've not got the chat open. My bad. I've completely ignored everyone. I'll open it in a second. So pound Swiss is looking like a potential short. We looked at this yesterday. Now, my entry wasn't, well, actually, the entry was met, but it was blown through, so I didn't take the position, luckily. So I was looking at this fib level here at the 0.618 and the 0.5. Didn't really get in anything, didn't see a reason to take that trade. So I'm now looking for a slightly higher level to get in. I wouldn't normally do this because obviously for people that watch me regularly, you know that the 50% retracement is pretty much all I do. That's sort of just the way I trade. The reason I would be looking to invalidate that or to sort of sway away from that in this trade specifically is because I've got the longer term sort of bearish sterling thesis. And mainly this trend is extremely aggressively to the downside. I mean, if you go into the weekly time frame, this has been a trendy or bearish trending market really since 2021. We've obviously had tariff news come out of Switzerland. So there's some things there to sort of back up this trade. And of course, we do have the pound Swiss reading bearish on the edge finder. So I think pound Swiss could be a nice one. Pound CAD obviously is the standout though. Okay. Now finished that, let me have a quick look at the chat. I do apologize. Hello everyone. It's good to see you all. Sluggy, Bashi, Shulls, Ball Out, of course, Ball Out's here. Good to see you guys. Hope you're all well. Anyway, pound CAD. So pound CAD is really good, but it's really frustrating as well because as we just looked at, we've got a really good reading on the edge finder for a short play. So that's obviously where we're leaning, or where I'm leaning, I should say. Technicals look okay right here. Missed the entry right here. Didn't take the entry. Wasn't paying attention. However, this market at the moment is very, very range bound. Now, someone said, yes, I said it was range bound yesterday. Someone disagreed. It depends what time frame you're looking on. Obviously, at the time we were looking at this move here. To me, it's still in a range. So I'm considering this a range bound market because we're not really doing anything within this zone here. So I'm waiting to see if we can have one final push to this 0.5 level, meet the 200 moving average, and then I will look to execute shorts. But again, as I mentioned yesterday, I think I might be expecting a bit much or being a bit greedy because the problem is this would have been the perfect entry because obviously it was within the fib, rejected this 0.618, came into this level of previous structure, obviously break and retest. Just didn't take it. I can't remember why I didn't take it at this point, but then the re-entry or the second opportunity was here. And again, I did miss that, unfortunately. So expecting a third entry opportunity, don't know, that might be pushing my luck a little bit. So we'll see, but it's definitely on the watch list. But that's the only way I could really get into this market at the moment is just waiting for maybe some sort of triple top to form up here. Bashi says we're good. That's good to hear, Bashi. Where's Lee? I don't know. I've not seen Lee in here for a while, actually. I hope he's all right. DXY trending on the 15 second. There you go, Josh. We got some expert analysis in here. Yeah, I've not seen Lee in a while. Euro dollar. Yeah, we can have a look at euro dollar. I don't really have much on euro dollar short term. I think 1.2 still remains quite attractive. However, it is going to depend on central bank movements in 2026. However, at the moment, it wouldn't be a huge shock to me if we do reach 1.2. Beyond there, to me personally, it seems a little bit of a risky play to try and trade it above 1.2, just because I think at that point we're going to start seeing a little bit of caution from the ECB in terms of the value of the euro. We might see a little bit of talks in the market there that it shouldn't really be higher. Obviously, when I say should, very loosely is how I'm using that word. However, something I mentioned a few weeks ago, it might be maybe 2 or 3 weeks ago, is this sort of fib level I'm still watching on euro dollar. So on the monthly time frame, what we've got is a very, very nice setup. So we've got sort of a downtrend here on this monthly, consistent lower highs getting printed. The moving averages are still bearish. Doesn't mean too much in this market or on this time frame in this market right now, but bearish moving averages, which is nice. And this market has just rejected the 50% retracement level really, really nicely actually here. So I'm just watching really to see. I'm not going to trade the monthly, obviously. I'm not going to start placing any trades just due to this, but I am paying attention to if there's any catalysts that could drive euro dollar lower, maybe even towards 1.05. I know it's a stretch, but it's possible. That could be a play again for 2026. I know that I keep mentioning next year, but obviously that is approaching very quickly. We're almost in December already. So that's definitely something I'm looking at short term. Short term, to be honest, bearish play. So short positions make sense. Again, we've got these lower highs getting printed. We're in a bearish trend. I suppose one thing to pay attention to is this low, or is this forming a higher low? And we're going to see this trend change. That's definitely possible. However, for now, the way things are, I would be looking to short on the next pullback to this 200 moving average and look for this trend to just continue. But beyond that, there's not really much else on my mind for euro dollar. I know I kind of gave you two different ideas there, long and short, but the short play is obviously short term, and then the long play could be next year. To be honest, I don't want that to happen. I would really like the dollar to continue higher, start running towards 110. You know, who knows? Who knows what's going to happen? Thought you were dollar bullish. I am dollar bullish, yes. The 1.2 target comes from a few different things. It comes from the ECB verbally spoke about 1.2 maybe 3, 4, 5 weeks ago or so, maybe even a bit longer. They spoke about 1.2. We've also got ING's 2026 targets. I'm not going to pull them up, but I showed them on stream a few days ago, I think. So ING's targets are the ones I've marked up. So basically what ING are expecting is higher on every quarter. So Q1 2026, I think they wanted 1.2, or they were looking at 1.2. Q2 was 1.22, Q3, so on, so on, so on. So these targets are from that. That's where I've derived them from for you. Can I check lean hogs? Absolutely not. Pound dollar, yeah, we can have a look at pound dollar. Australian US dollar, okay. Who's Charlie? What's going on here? Oh, okay. Oh, yeah, okay. I see. So pound dollar, pretty much the same idea. In terms of price targets, I'm a little bit mixed on pound dollar, to be perfectly honest with you. So right now, I'm relatively flat in terms of short-term ideas for the dollar. We've already covered that. So right now, I'm actually not looking to do very much. The weekly is actually slightly bullish here. We did have this moving average cross, just indicating that we're now in a bullish trend. We are seeing a little bit of a rejection here towards the 50 and the 200 weekly moving averages. That does tell me buyers are still interested in this market at least. However, short term on the daily and H4, we've seen this break and retest get formed here. So previous structure, we broke below, we're retesting, and we have almost, not fully actually yet, but we've almost got a bearish trend here on the daily as well. So that does put me in a little bit of a mixed situation. We've got the weekly bullish and we've got the daily and H4 bearish, or at least starting to look bearish. Now, in terms of longer term targets, you guys should have watched the 2026 webinar because we spoke about pound dollar and my sort of longer term ideas. But I think pound dollar 2026, at least the first half, could be quite bearish, and that's basically banking on the idea that the Bank of England is going to cut before the Fed, and we've got structural problems within the UK. We spoke about that again on the webinar and yesterday, so I'm not going to go through it all again today. But yeah, pound dollar wouldn't surprise me if we end up seeing it towards 1.22. Not quickly, but maybe quicker than what you might expect, especially if we start getting those catalysts, which could be things like lower inflation in the UK or signs for the Fed to slow down on rate cuts in 2026, those types of things. Thoughts on Australian US dollar? I'll be perfectly honest with you. I have absolutely no idea what's going on in Australia right now. So let me just take a quick look. Just bear with me for 1 second so I can give you something accurate. So the RBA is currently neutral to hawkish. Let's just see what the edge finder is saying. No immediate readings. We've got Aussie yen reading bullish. I think that's more derived really from the yen weakness, as we see New Zealand yen, CAD yen, Euro yen as well, dollar yen. So it doesn't seem like there's really much going on. I think I would lean towards being a buyer of the Aussie though. Hold on, let me refresh. We're missing the circles. Yeah, I think, to be honest with you, just from the little research I have done on the Australian dollar, I would be a short-term buyer, long-term seller. So short term, I think we could see some sort of pop in Aussie dollar. And that is actually, sorry, I'm getting my times mixed up a little bit here. So what we need to account for is the Fed expected to hold rates in December. So we could see slightly lower trend or a slightly lower trend. Once we get slightly more towards 2026, and if we do see some more dovish comments from the Fed, such as, more clear signs that we are going to get those rate cuts in 26, then we could start seeing some bullish movements if we get the RBA to stay hawkish as well. That would just give us a bank divergence. So that's kind of the idea. Maybe some short-term low risk positions to the downside, and then picking up some maybe later towards 2026. It does pain me to say that. I know I said this before, but I am a dollar bull. But obviously, as a trader, you've got to go off what you're given. And right now, that's what I've got. Why is Onion Futures banned? Because they make me cry. Oh, yeah. Bashi made the same joke. That's sad. Today's movement is crazy. Yeah, well, we had some US news. Let's see. We don't have US Open yet, actually, or at least NYSE Open just yet. But yeah, it seems like the indices markets are doing quite well. I mean, to be honest, it really depends where you sit. I'm going to talk actually about the Nasdaq specifically, because I think that's where the hubbub is, the chitter chatter, especially around AI and tech and the bubble and all those types of things. I'm finding it tricky to really do much on these markets because the daily looks okay. We've had quite a nice rejection off previous support, almost at the 50-day moving average as well. So kind of a expected, if you will, area to see some buyers step in. Short term, or not short term, on the H4, I'm a little bit cautious that we are we are currently at this 200 and the 50 moving average. We're also at this sort of double topping area. So there is a chance that we see a little bit of a turnaround here. Whether that will happen or not, I don't know. But that's just something that's on my radar, and I'm not going to be picking up the Nasdaq just yet, or really doing anything at all. However, I'm fairly sure that we do still have the indices reading bullish. Let me just double check. Actually, we don't. It's only Nasdaq on here with a score of 6. So to be honest, that's kind of confirmed it. I've got no interest in buying the Nasdaq right now, because the S&P, I think the Russell was up there as well with the Dow. They've all fallen off. It's just the Nasdaq remaining, and its score is lowered now. So yeah, no interest from me just yet. I'm not Marco, but I'll answer your question. If you think euro dollar can reach to 1.2, how come you are bullish on the dollar? I mean, it's a fair question. So as I said, the Euro dollar targets of 1.2 aren't actually my targets. They're from ING. So they gave us a report basically listing out their price targets for 2026 on the majors. So euro dollar, these are their price targets. Q1, they are expecting 1.2. In Q2, they're expecting 1.22. In Q3, I think they're expecting 1.23, and basically so on. So that's where those targets have come from. Obviously, I'm not going to try and puff up my chest in any way. They've got whole research team. They're much more knowledgeable than I am, I'm sure. So I'm not just going to completely ignore them. However, yes, personally, I am bullish on the dollar, but that's mainly just because I think it's a little bit of a tricky job to really bet against the dollar. Obviously, this year, that idea has played out fantastically well. But overall, generally speaking, as sort of a blanket statement, betting against the dollar, betting against the US has been a very difficult thing to do. I mean, look at the S&P, look at the Nasdaq, look at the dollar. So yeah, I don't really like to take a bearish dollar approach unless the data is overwhelmingly bearish. So that hopefully clears that up for you. BOJ intervention? I don't know. I am expecting it, but I've been expecting it for a while and it's still not happened. So it's like the mythical thing, the mythical Bank of Japan intervention. Are we going to get it? Are we not going to get it? Which is unfortunate, actually, because where was it? Yeah, it was. Hold on, just bear with me. Let me sort the chart. Right here, when we had the Japanese PM election, I was very, very cautious about buying. And I was telling you guys, and this is my bad. It's obviously hindsight, but obviously that was the wrong call to not buy dollar yen. But I was very, very confident that we were going to see an intervention quite soon. It's not happened. So yeah, I was wrong there, but it is what it is. And it's still a very, very relevant concern to have. So what I'm looking for now on dollar yen is obviously we've got this previous high. I'm looking to see if we can see some sort of pullback here, and then I'll buy. But, and the big but here is I'm not buying full size. It will just be a very small buy, anticipating or at least taking caution for that possible intervention risk. And if I do, if I get caught in the intervention, fine, the loss will be very small. But that's basically what it is. I think later into 2026, we could start seeing some sort of reversal. When or where that will be to is tricky to say right now. But we, of course, need to consider that the Bank of Japan is expected to hike rates in 2026. And obviously, then if we match that with just expectations that the Fed is going to cut rates in 2026, that does give us quite a nice divergence. So that could possibly give us some short opportunities. But for now, I'm not doing anything on dollar yen. It's just a sit and wait market for me. ICT is watching. I'm not going to say anything. ICT might learn something. Looks like I don't need to say anything. You guys say it for me. Definitely stepping into 157, 160. That's the thing. Yeah. Yeah, it's, because we don't get any warning or really any, I mean, to be honest, actually, I say this, one of my old friends, I don't talk to him anymore, unfortunately, but I had a friend that works or actually runs his when I say runs a hedge fund, it's not like JP Morgan or anything like, it's a very small sort of boutique hedge fund. He somehow managed to figure out when they were going to intervene. I think it was last summer or towards last year, somewhere like that. And basically what he did was looked for the US holiday, and it was a catalyst trade based on some Japanese data. I can't remember what it was exactly at this point. But yeah, he managed, what I'm trying to say is there are small sort of breadcrumbs you could pick up to try and basically guess when it's going to happen. But of course, we don't get that sort of, we don't get a tweet saying we're going to intervene in 10 minutes, guys, close your lungs. It just happens and you've got to deal with it. So yeah, it's a risk I'm taking caution of, but what can you do? Oh, he's sending a white van to my house. Oh, well, to be honest, even if he did that, maybe actually some of his stories might be a bit more credible. Yeah, Bash, that's why I don't use Twitter anymore. It brought out the worst side of me. Sometimes I'll go on there to post a tweet and I'll close it again. I don't use X anymore. I spoke about this in one of my YouTube videos, actually. And I've just realized I'm going way over time. Yeah, sorry. I just realized I'm like half an hour into my segment. My segments are half an hour. My apologies, Marco. I completely lost track of time there. Guys, I'm going to have to head off. I'll tell you that story another day. See you later. Have a good one. Stay safe. Don't get margin called. And I'll see you all tomorrow.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I hope everyone is doing well. Let me see what I have shared right here. Okay. So I just jumped onto my PC. I haven't even checked the NFP report because I was a bit busy. So thanks, James, for covering for me in this last 30-minute segment. Anyways, I hope everyone is well. So let me see the NFP print right now. So let's just expand this a bit. Let's see. So what has happened? Whoa. This is quite good, I would say. Although unemployment rate jumped, the NFP came in much higher than expected. Okay. So that is pretty nice. I do have 3 positions in the markets. So I have my pound Aussie sell. This is a new position. I have my silver long, which is kind of around break even, but I did take 50% off at the high. And I have a USD CAD long, which seems to be holding up in some profit. The DXY, a bearish reaction? What? That's pretty weird. How can we get a bearish reaction if the NFP came in pretty solid? So pretty solid data. The claims came in right around the forecast. The only thing I see problematic is the unemployment rate, which did jump. But let's also see the Fed Watch tool. How is that looking? So let's see Fed Watch tool. And we jumped a bit to 41.8% for a rate cut in December, but still the biggest percentage, the biggest possibility is for no rate cuts. In December. So I think because of that, of course, we had the recent rally in the DXY. We almost went back. Well, we actually crushed the 100 level. We went far above it, and we have pumped quite nicely from Monday this week. So a great week for dollar bulls. Stock market is loving this. S&P is up as well, massively up. Nasdaq definitely up. Nvidia earnings came in pretty bullish. So we talked about Nvidia earnings yesterday. They came out at the market close and they came out pretty bullish. So they came out above the forecast and it was a nice beat. So it was a pretty healthy beat. So the market jumped. Again, it took the Nasdaq with the jump. Nvidia is a massive part of the Nasdaq. It also may have added some confidence into the AI story. If you have been following my streams for a while now, you would know that I'm kind of worried that the AI narrative has slowed down a little bit, so that AI is no longer the main driver, or that AI is becoming sort of a bearish driver, meaning people are starting to ask questions. What will we do with all of this with all of these investments? How will we pay off the debt? What will be the ROI, so return on investment, for this AI story? Well, the recent NVIDIA earnings must have given the markets some confidence, and the Nasdaq is rebounding quite healthy. So it's looking pretty nice right here, and kind of respecting. Is it respecting the trend line? Let's see. Well, kind of. So I'm bullish. I'm definitely bullish. I would have liked to see a bit of a bigger correction, a bit of a bigger pullback to close to the 200 EMA, or maybe to this support level right here. And then I would be very interested in buy setups. That unfortunately did not happen. I mean, maybe fortunately for some people, unfortunately for others, because if you are already in a long position, then this is pretty nice for you. But if you're looking to go short, then this is, or if you're looking to get in at a lower level, then this is not the best. So that is the general state of the markets. If I jump back onto the Forex Factory calendar, did we get something else today? No, pretty much it was mostly dollar news. So the NFP. And as I told you, the main thing that I'm watching for this week is the NFP number. This was, of course, the September NFP. If we go to the Edge Finder, we go to labor data, NFP, and it has been updated. So that's pretty good. This is a pretty good sign. I just don't understand how the probabilities of the rate cut went up from this, and how the dollar didn't have a massively bullish reaction on this. That's pretty weird, because the beat is pretty substantial. From 53K to 119. The revision for the previous number was only minus 4K. That's a pretty small revision. Oh, no, so it's actually revised from 22K. Okay. So that is interesting. Okay, so the revision is actually minus 4K, and it was 22K. That is bearish. So one thing I can notice, or two things I can notice, the revision was pretty bad for the previous number, and the unemployment rate jumped. So the unemployment rate jumped from 4.3% to 4.4%. So if we go to the unemployment rate for the USD, it's rising. That is not the best sign. That is not the most bullish sign. So you could say the numbers are a bit mixed. There is some bullish segments, there is some bearish segments. Overall, looks like they're mostly neutral, since the DXY mostly stays flat on this news. I mean, it did sell off on it. Let's see it on the 1 hour. There definitely was a sell-off, but it wasn't like a massive sell-off. It wasn't a drastic move. So that's what's happening. That is pretty much what is happening. Let me see what you guys are saying. The Fed Watch tool just jumped up to 40% cut from 27%, says Sluggy. Yes, so that is pretty interesting, the reaction. And if you dive a bit deeper into the numbers, you're gonna see it's a bit of a mixed bag. Bird Poo, hey, what's up? So hello, Sluggy. GU, okay, we can do GU. Marco, are we good? Hope you're good. I'm doing pretty well. Cedric, what's up? Robohola, Mario, hey Mario. It's Marco, it's not Mario, but I think you're just you're joking. So because you always put hey Marios, I think you're just making a joke there. And the 4.4% is being the main factor. What are the long-term targets for pound Aussie? Yeah, that's a new position I have, which I am going to go over a bit later. CME is still moving around a lot. NVIDIA earnings saved us, possibly. So Bird Poo has a good point. NVIDIA earnings pretty much make the bulk of this move to the upside on the Nasdaq, if I'm being honest. And it definitely added confidence back into the artificial intelligence story. I would agree with that. And also, this is not such a reliable tool. It changes every day pretty much. So it's pretty, you cannot rely on this to tell you exactly if there will be a rate cut in December or not. This is just the market pricing in the rate cut. So it is just people betting on something happening. It's pretty similar to what you can see on Poly Market, like will Trump fire Powell before 2025? That was one of the polls. Like, will Trump fire Powell before the end of this year? And no one knows. No one knows, but people do place bets. People love to bet. So this is not the whole story. If it's in extremes, 90 or 10%, yes, it could be a good indicator. But then again, this number was 90% at one point. So there was like a 90% guarantee of a rate cut in December. And guess what? The Fed doesn't even know if they will cut in December or not. They still have some time to decide. So am I watching this data? Of course I am. But my advice, don't take this data as something set in stone. It is not this indicator that is going to tell you for sure what is going to happen. It is just the market sentiment. It's great for seeing the market sentiment. So what do the investors think? What do traders think? Currently, they think that there is not going to be a rate cut. They used to think that there was going to be a definite like 90% rate cut or 90% chance of a cut. Tomorrow, there's lots of news, so maybe that'll help. Let's see. Friday, yes. Okay, quite a lot of stuff. We have some dollar stuff. Interesting. But I would say the most important number, of course, was the NFP number. If you're wondering when will October NFP come, so we're still missing October NFP. The BLS, Bureau of Labor Statistics, they said that they are going to pause that release and they're going to release it once they are ready, but they cannot give us an exact date. That is at least what I got from my research. Maybe someone has some different information. From what I know, no one knows yet when the October NFP will be released. Hey, Marco, how are you? Hey, Joshua, I'm doing pretty well. How are you doing? Can the XY pull back to 99700 to climb strongly? Well, I'm bullish on the DXY. I don't think a massive pullback is coming. I don't see what would be the massive catalyst for the pullback. Like, I know what was the catalyst for this sell-off, but what would be the catalyst for the DXY to go to 97? I personally don't see it. I think the path of least resistance is to the upside. Technical analysis looks pretty bullish. We seem to be respecting the trend line. So yeah, looks pretty healthy, looks pretty good. I was very impressed with your ChatGPT performance, so I decided to test it myself. I started yesterday, and so far it's 2 for 2, but it's still on demo. Oh, that's awesome. So good luck with the testing. I can show you my results right now. I have it open here. So this is it. For anyone that doesn't know, I'm getting daily ChatGPT trading signals and one trade on the S&P, one trade on a major currency pair of ChatGPT's choice, and then I put those trades into a DNA funded challenge, a 50K challenge. This is the equity. I have started this from September, but the whole experiments I started from June. So from June to now, ChatGPT is up around 27%, while this particular account is up plus 3%. Okay, that's pretty good. That's okay. I have had some drawdown recently. Current trade open is a sell on the S&P. For some reason, ChatGPT decided to sell the S&P. Pretty interesting decision. We will see if it will actually pay off. I don't think it will. I think right now we're actually pretty bullish. But of course, I cannot intervene. So I have to blindly follow the signals. And by the way, if you're looking to get funded, if you're looking to get a funded challenge, expand your trading capital, because that is one of the biggest issues for retail traders, check out DNA Funded. So DNA Funded is a reliable prop firm ran by professionals. It's not just some kid in a basement driving Lambos and Ferraris. So it's actual business people or people in finance. It's a big broker behind it, basically. And with our discount code, which is A1 Live, so A1 Live, you get 25% 25% off any challenge on DNA funded with this code, right? So 25% off any of their challenges. It is the cheapest reliable prop firm in the game. It's not the only reliable prop firm, but with our discount, it is the best price, I would say. One thing I also love about it is Trade Locker. So DNA Funded exclusively uses Trade Locker, which in my opinion is the best software, execution software in the game. Why? Because it has a built-in risk calculator. So you don't have to use this or this, which is just takes so much time and it's so boring to use. So you just use the built-in calculator and you save yourself a lot of time. Okay. And good luck, Joshua, with your challenge. I did test Grok, which is another artificial intelligence software, and Grok absolutely bombed. So Grok had like minus 8% drawdown, and that just, it is not good. Gold, sure, we're gonna do gold. We're gonna do silver. Bitcoin, that's a pretty cool jacket, Marco. Thank you, Sluggy. I didn't have time to change into something more suitable for streaming because I was in a hurry. But this is the Adidas tracksuit. So I hope you like it. Hi, Mario. What is up, Loki? Loki. What's up, Loki? Star Trek vibes. Yeah, that Adidas jacket is cool. I'm glad you like it. Is it okay we call him Mario now? You can call me Mario. I don't mind. It's a cool name. Your thoughts on Aussie CAD? Okay, we can cover Aussie CAD. Got PMIs tomorrow. That'll help paint the picture. 90 turned into 205 really fast. 90 turned into 20 real fast. Yes. Although, what are you talking about? Are you talking about the Fed Watch tool? I'm not sure. NZD CAD, GJ. Do you still trade with DarwinX? Yes, I do. Balkan stereotype. Of course, all people from Balkan, we have an Adidas tracksuit, and Adidas needs to hire you as an ambassador. They should. I already have 3 tracksuits like this. They're just different color. Bashi says, worst of the top 10 prop firms. I don't agree with you. I've tried a lot of prop firms, and DNA, in my opinion, is pretty good. I had an issue with a bad fill. I reached out to support. I did wait quite a while, a few days, but once they got back to me, they refunded $150 into my account. So we got that resolved pretty, I would say, efficiently in the end. While most prop firms will just completely ignore your inquiries. So we had some requests. Let's see. Let me first run through the watch list. So I have 4 things that I'm watching: Nasdaq, Pound Aussie, Silver, and USD CAD. For the Nasdaq, I'm not calling for a crash. I'm calling for a pullback, or I was calling for a pullback. Now I don't think so. It's going to happen. Now it looks to be bullish. So I was looking at the 200 EMA, which was right there. I was looking at 2400 and possibly 2300 as some levels of support where I would like to get in on a nice buy setup. Looks like we're not going to reach that. So NVIDIA earnings really crushed. We got some good employment data. I don't think no rate cut in December is that important. I think even if we don't get a rate cut in December, I think this can pretty easily go up. You have to think about the Santa rally. You have to think about the seasonality. See, S&P November and December, crushing performance. Nasdaq, November and December, massive performance. So this is the Santa rally. This is what happens at the end of the year. And then we look at company buybacks. So companies usually do a lot of buybacks at the end of the year to inflate the stock price. Why? Because they have shareholder meetings, because they have the Christmas party. Guess what? It's all psychology. So also hedge fund managers, pension fund managers, big bank portfolio managers. They all have Christmas parties. They all have end-of-year conferences or calls. In those calls, they want to have good performance. They want to say we are heavily exposed into the US stock market, because investors love to hear that there is exposure in the US stock market. Everyone loves the US stock market. What would be not so good to say at an end-of-the-year Christmas party? It would be to say that you're long on the DAX. So if you're a hedge fund manager, make sure you don't mention being long on the DAX, because this thing looks like absolute crap. But the Nasdaq, of course, everyone loves the Nasdaq. Hedge fund managers, pension fund managers, portfolio managers, they don't want to talk with their clients and say, we're not really heavily exposed in the US stock market. We sold most of it here. That's not what you want to say to your investors. You want to say, yes, we sold here because we had to, but we bought everything back and we are now inside of this huge train to the upside. That's why you get the Santa rally. That's why you get the explosion at the end of the year. That's why the seasonality is so bullish for the Nasdaq and the S&P. So what's my game plan? I don't know what exactly my game plan is. Yesterday, before NVIDIA earnings, my game plan was to wait for a bigger pullback. Now, I'm not so sure. Maybe I should try to take a stab at it right here. I'll think about it. And of course, you will be updated in the A1 Trading Discord. If you want to get my trade signals, trade breakdowns, trade analysis, fundamental event breakdowns, you can join the A1 Discord with a pretty hefty discount using this code. So I think it's a 40% discount, Black Friday discount, the biggest discount we do all year. And this code works both for the A1 Discord and the Edge Finder as well. Okay, all of the links are in the description of the stream, or you can find them in the chat, in the live chat right now, posted by James, who is the producer behind the scenes. So the Nasdaq is covered. Pound Aussie, I had a question about the Pound Aussie. This is a new position I have taken, a new sell setup. Currently, it's around break even. This is a fundamental play. I have been watching this currency pair for a while now. I'm bearish on the pound. I'm bullish on the Aussie. We can quickly do some analysis. So first, you have to distinguish between short-term and long-term data. If you go to the short-term data, the UK looks healthy on paper. The Aussie looks even healthier. So short-term, Aussie beats the pound. But now let's take a look at the long-term. So first, GBP, negative and overall not looking good. Aussie, pretty bullish. Let's look at the unemployment rate. Rising and 5% for the Aussie. Last number is 4.3%. Overall, I would say it is not rising that much. So inflation we can look at as well. Aussie has better inflation. So there is more room for the Australian central bank. See, the inflation in the UK is really bad, while in Australia, it's not so bad. 3.2%, that is the recent spike, but I would say it's okay. And this could lead to the Bank of Australia to be more hawkish, which is bullish for the currency. While the Bank of England, they basically can't afford to get more hawkish because they're going to hurt the GDP and the unemployment even more. Main problem with the UK is the GDP. Just, it doesn't look good at all. One more thing, the Aussie is heavily connected to the metals market. 30% of Australia's exports come from or are metals and mining. Metals have done great in 2025, which should have helped with the price of the Aussie. I'm bullish on the metals. I'm long silver. I think gold looks bullish as well overall. So I'm kind of bullish on the Aussie because I'm bullish on the metals. Also, Aussie is a very risk-on currency. Aussie is very much connected with a risk-on sentiment. And if you were watching Aussie yen yesterday, you would notice that when NVIDIA dropped its crazy earnings or great earnings, Aussie yen shot up because Nasdaq shot up because it's a risk on environment. So Aussie is pretty much a risk on currency. That's why I love this trade. Technical analysis is good as well. We are below the 20 MA. If you zoom out, I would say we are in a downtrend. I would say we have produced a break and retest position. We broke the low, retested it, possibly ready for the next drop. If you look at what is the support level where we could get some problems, I would say it's here. Yeah, or actually maybe in this cluster as well. But still, there is some room for us to go down. So at least we can clear my stop loss and be in a healthy position away from my stop loss. So these are some support levels where we could struggle, but I would say still a pretty good trade, positive reward to risk, tight stop loss, 166 pips, and this was a signal in the A1 Discord. Silver and gold. I'm bullish. I'm in a position on silver. I think this goes up. I think the general environment is still high inflation. US government has reopened. Liquidity taps have reopened. More spending is continuing. Trump's big beautiful bill is coming. Printing, massive printing is also continuing. What does that mean? It means inflation. What does silver and gold do during inflation? They go up. Actually, a great indicator of inflation is gold. I would say this curve of gold pretty much represents how inflation has been mostly going up. Why do I say that? Well, because let's say you found a mansion in the 1970s and that mansion used to cost $1 gold bar. $1 gold bar, okay, like you see in the movies. Well, you can buy that exact same mansion today with the same gold bar. Does that make sense? While in dollar terms, that mansion costs 10 times more or maybe 20 times more in US dollars from 1970s to now. That's by how much inflation has risen, and that is the power of buying real estate, buying gold, buying silver, buying US stocks, not keeping any cash in your bank account, because cash is trash, if I can express my concern that way. So silver, plan is to trail the stop loss. Plan is to trail this position to the upside if it does continue going higher. As I mentioned, I took 50% off at the high because it was also sort of buy the rumor, sell the news environment scenario. I bought the rumor on Monday. The rumor was US government is going to reopen. On Thursday, the government actually reopened, and that was the news. So buy the rumor, sell the news. Guess what happened? On Thursday, we shot down with a lot of selling pressure. So that is how that sort of a trading edge works. But I'm keeping 50% in just to take advantage of any possible uptrend in silver in the future. USD CAD. USD CAD is the final position I have. This one has been running for quite a while now. From the 28th of October, I have been receiving positive swaps, which is always nice. Who doesn't like positive swaps? You can check that in the carry trade scanner. USD CAD. See? Buy direction. This is the interest rate divergence. So I don't mind holding this position for the next 2, 3, 4 months because it just keeps giving me income. Every single day, I collect a small amount of income that covers some of my negative swaps from some other positions, such as Pound Aussie and silver. What is the game plan here? Game plan is to trail my stop loss. And also, is ball out anywhere in the chat? Ballout has been calling for DXY to 95, while the DXY went to 101, almost, or 100.5. So I'm pretty bullish on the dollar. I think the dollar has more upside. I think this trend line holds. I believe the Fed is going to be more hawkish than people expect. It happened on the 17th of September. It happened on the 29th of October. Trend is telling us that the Fed is more hawkish than people expect. And also, we had a rate cut both times, and the dollar went up. How does that make sense? That should be bearish for the dollar, and then the dollar goes up. So that doesn't make any logical sense, but it just tells you the power of the strength of the dollar, and that looks pretty healthy. That's why I'm long USD CAD. Now to quickly check out the comments, I'm gonna do a last request from the comment section. Russians love Adidas. I think they do. If they can buy it there, if there's no like ban of Adidas because of the war. DNA has a consistency rule. Yes, if you with the payouts. I think I know what you're talking about. That is correct. Yes, profits exceeding the 40% daily limit will be deducted from the payout request, but the account will not be breached or disqualified. Yes, there is a limit how much you can make per day. Not the best rule, I have to admit, but if you look at all of the advantages and disadvantages, I still like DNA. Okay, let's see. Why is it called the Santa Rally? Because it usually happens in November and December when it's Christmas and when there is massive spending going on around the world. Do you have the matching gold chains to go with the tracksuit? No, I'm saving up for those. Okay, goodbye, Bashi. Thanks for joining. Goodbye, Mario. NAS 100. Well, I already covered NAS 100. I'm going to do GBP/USD as the final currency pair. So, GBP/USD looks pretty bearish. You already know I am pretty bearish on the pound. I'm bullish on the dollar. This is not such a bad play. I think there's more room for us to go lower. I think the next level of support is here. And if you get in on a nice sell setup, we could go down. So fundamentally, pound dollar looks, or cable house, some people like to call it, it looks pretty bearish. What does the edge finder say? Neutral. Yeah, the reason I'm not trading it because I think there's better opportunities out there. For example, pound Aussie. I think that's a bit better. And I'm already long the dollar. And for this one, I'm already short the pound. I don't want too much exposure, so I'm not looking for an extra position like selling pound dollar. And also the edge finder is neutral, so if this was bearish, I maybe would have reconsidered my decision. That is it for my segment. Thank you guys very much for watching. DNA funded, code is A1Alive. Make sure you guys take advantage of the discount, 25% off. We finally got the NFP. Watch out for the October NFP print. All of the updates will be in the A1 Discord, and I will see you tomorrow in the next stream. So thank you. See you.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. All month long, our products are 40% off, the biggest discount of the entire year. You can get access to our trading softwares, trading community, and so much more right now on our website, a1trading.com. Make sure to subscribe for future streams, and don't forget, if you're looking to get access to free courses, prop firm discounts, and free trading tools, as well as massive discounts on all our products, head over to a1trading.com. See you next time.